Hey everyone, Coach Investor back to another SoFi video for today. So let's discuss this quarterly earnings because the market reacted very positively. At the time of making this video, the stock is actually up 15 to 16% or so. Guidance for the full year was also better than expected despite the negative impact of this extension of the CARES Act. So we're going to have a look at all of that. We're also going to look at their recent acquisition. I made a community post about that, but just want to talk about it just a little bit more. So SoFi announced at the end of February that they have an agreement to acquire Technisys. This will accelerate SoFi's development of a unique full-stack multi-product digital bank technology platform offering best-of-breed financial products and services. The company they're acquiring is a leading cloud-native digital multi-product core banking platform, and their shareholders will receive an aggregate consideration of approximately 84 million shares of SoFi common stock, less than 10% of SoFi fully diluted share, less of 10% of SoFi fully diluted share count as of September 30, 2021, subject to customary adjustments set forth in the merger agreement. Now, these shares have an aggregate value of approximately $1.1 billion, based on the volume-weighted average price of SoFi common stock for the 20 trading day period ending February 15, 2022. The transaction is expected to close in the second quarter of 2022. The most impressive part for me is this right here. The estimated incremental revenue from the acquisition, including base revenue of Technisys and revenue synergies of the vertically integrated capabilities, is expected to add a cumulative $500 to $800 million through year-end 2025 at high incremental margins. This is a pretty big deal and not such a bad acquisition to make. And a bit like with Galileo, following the closing of the acquisition, Technisys is expected to operate as an independent subsidiary of SoFi Technologies and be part of its technology platform offering, with Miguel Santos continuing as CEO. So a bit of the same structure as Galileo. To me, this is another great acquisition, $1.1 billion worth it. In a couple of years, that might even be fully repaid. And it just enriches the whole SoFi ecosystem, the whole SoFi offering, Galileo, now this, everything with loans, stock investments, repayments, etc. It just enriches that whole ecosystem. Now, let's go and look at the numbers for this quarter and for the full year. But first, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. So first up, this is quite amazing. They've added a record 523,000 new members quarter over quarter. And remember, this quarter ended before SoFi Stadium hosted the Super Bowl. So Q1 will probably be another great quarter for the company. They now have close to 3.5 million members. That's up 87% year over year and 39% more member adds than Q3 2021. As for the product, that also grew at record levels, 906,000 quarter over quarter to close to 5.2 million. That's up 105% year over year and 51% more products adds than in Q3. So tremendous growth and maybe even accelerated growth. As for Galileo accounts, reached 100 million accounts. To me, this is the best part of the business. This grew 67% year over year. This truly is the underlying, you can even call it maybe the AWS of neobanks. As for the lending and the financial products, the lending part only grew 18% to close to 1.1 million. The financial services one grew 155% to around 4.1 million. And this just shows how SoFi has grown as a business. Back in Q4 2019, the total lending products were much more than the total financial products. Right now, there's a huge increase in financial products, a bit less relying on the lending products, and that's why you see the business performing, even though that side of the business is taking a temporary hit. Now, as for the adjusted net revenue, that grew 54% year over year to $280 million. and adjusted EBITDA of $5 million in the positive, representing a 6th consecutive quarter of positive adjusted EBITDA. As for the annual performance, it's the first year that they finished with a positive adjusted EBITDA, and they've reached more than $1 billion in adjusted net revenues. So as we've seen, this was not just a great quarter by SoFi, this was a very, very good quarter by SoFi. Growth and accelerated growth in a couple of segments here, which is great. Now let's have a look at the guidance. So Q1 non-GAAP guidance, they obviously talk about the negative impact of the extension of the federal student loan payment moratorium to May 2022. They estimate that the negative impact to be approximately between $30 to $35 million of revenue and $20 to $25 million of contribution profit in Q1. Now they expect adjusted revenue to come between 280 and 285, representing growth of between 30 and 32% year over year. As for adjusted EBITDA, still positive, but it's either going to be flat or $5 million. Now as for the full year, they expect growth of 55% to $1.57 billion. The expected number was actually 1.45, so they beat on that, which is great. Adjusted EBITDA, again, positive, big increase here, $180 million compared to 30. Then adjusted EBITDA margin increasing as well to 11%. So to conclude, not much to add, to be honest. Incredible quarter, guidance is very good, especially for the full year. Even though they are taking a hit right now, they still expect, and they just beat estimates for the full year, so that's great. Execution here is key. The story for SoFi is long-term, and right now we're still in the early innings, so that's great. If you're picking up shares right now, if you picked up shares in the last couple of weeks when it reached around $10, $11 or so, great, but don't forget you're here for the long term. If you're playing the options game, that's fine as well. Very, very volatile stock, but overall, very happy with this quarter and execution. That's about it. Leave your thoughts down in the comments below. If you like this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.